Caleb Wright here from Bitcoin Lifestyles Club, and today I'm going to provide you with training that will help you achieve a winning trader's mindset as we take a careful look at the psychological aspects of the market and trading that you surely can't ignore if you want to survive and have real success with the crypto markets. Of all the crypto educators I see out there, I don't see enough of them covering this all-important topic before getting on to their more advanced training. So without further ado, welcome to the most competitive arena in the world, crypto, an emerging financial market that the world's top institutional traders and investment bankers are just starting to dip into. You have to quickly realize that you are up against some of the sharpest, fastest, most intelligent, well-informed, inexplicably irrational, and in many cases, unethical minds in the world who are all aiming to win your money in the zero-sum game we call the crypto markets. Your everyday competition includes computers, servers, and automated bots that are reacting to the market faster than you ever could. Traders who have more skills, knowledge, and experience with financial markets than you. Banks, investment funds, and whales who have more funds and resources than you. Many of these same entities have inside information that you don't. Traders who are spreading misinformation online to the benefit of their trade positions so they can win over you. And of course, last but not least, the voice in your head that has you second guessing yourself and trying to get you to stray from your original trading game plan. Before you can learn how to win, you gotta learn how to survive, because it's a jungle out there. It's absolutely essential to learn how to stay in the game by avoiding the mistakes that so many noobs make that end up wrecked, which is a term created and popular within the crypto community for describing a trader who has lost a lot of money on a trade, wrecked his portfolio, or otherwise. So how do you survive in the crypto market? You learn the lay of the land by understanding market psychology and having a solid entry and exit strategy in place. In other words, you develop an understanding of how the various actors and levels of traders and the masses think and act in the various situations that you encounter in the market, and you have a solid game plan in place that you stick to. You ready to master these life-changing skills? Let's get started. Next, we're going to go over the 90-90-90 rule. That's 90% of traders will lose 90% of their money in 90 days. Yes, the financial markets are absolutely merciless. For all the winners, there are an equal amount of losers. The majority of people who try their hand at trading without proper education and training will end up failing or becoming wrecked. So obviously, the key to your success is to not follow in the footsteps of the majority and to carve your own path to success by doing virtually the exact opposite of them. The majority is selling, you want to be buying. The majority is buying, you want to be selling. Does that make sense? We're going to talk a little bit more about that. So how do the majority of noob traders fail? It's because they have a losing trader's mindset. It's because the majority of traders out there are new, inexperienced, uneducated, and have what we call the losing trader's mindset. It's what the majority think and do, like buying too late when the price is already rising or pumped. They've already missed out on the best profit by not being in position before the pump, and they are also increasing their risk of going into the negative when the price corrects. They sell when the price has been falling and dumping. They already missed the best time to take profit when it was going up, and they may even be losing money on this trade. Another thing a newbie trader will do is they'll buy too early when the price is falling or dumping. They end up entering the trade, and then it dumps down another level in price, and many of them end up just selling it at a loss. And then you'll have when they sell too early when the price is pumping. This kind of newbie trader is really fearful of missing out on the profits and wasn't having confidence in his position in the first place. So he jumps out of the trade the moment he makes a small percentage, and then next thing you know, the coin moons to higher levels and he misses out on a major profit. Then you have the traders that hold on to losing trades and positions too long, when they should have exited and reallocated their resources to a higher probability trade. They hold on to winning trades too long, and the trades end up turning negative. And this is just a result of greed taking over. When someone is winning, a lot of newbie traders will just hold on thinking it will never go back down. Then you have the new traders that are taking on big position sizes and too much risk per trade. They could literally blow their account with a few bad trades. With trading, it's all about staying in the game to trade another day. And this brings us to the next problem, that a lot of newbie traders think they need to trade every day, and so they try to trade as frequently as possible, and will even find themselves forcing trades where there are no opportunities, and they shouldn't be making any moves at all. Then you have the newbie traders that think that they are always right. You can't think that you're always right. Sometimes you need to pivot and move in another direction. And the three major mindsets that most commonly lead to the above mistakes and leave uneducated traders wrecked are the mindset of getting rich quick, of which the big position sizes and risking too much at once is a symptom of that mindset. Then you have FOMO, which is another crypto community term that means fear of missing out. That's when these new traders will see coins that are pumping and they'll buy into the pump when they should have already done their research and bought when it was low. And then of course you have impatience, and that's where you have those traders that are selling too early before they get the real profit, or they're buying in too early before a coin has fully corrected. And so they end up in the red and possibly even losing money when they sell the trade that they don't even have confidence in. Maybe they haven't done research on the asset or whatever, and they just took advice from some talk on social media like Twitter. So now we're going to get into a little bit more detail into each of these things that we just went over. It's already too late as the price is taken off in either direction in both of these scenarios. By the time you buy in, it's potentially already at or near the top of its potential gain. By the time you sell, it's potentially already at or near the bottom of its correction. So do not chase exact tops and bottoms. You have no way of knowing exactly what they will be. It's not an exact science. And as you ponder these ill-fated kind of trading decisions, the longer you wait, the less percentage you will make and the higher risk you will end up taking on, with a very high potential of getting wrecked on the trade. The key to success is to be in position for these market moves before they happen. It's best not to be chasing profits after significant price movements have already happened. Next we have buying breakouts and selling breakdowns. As a rule of thumb, you should not universally buy breakouts or sell breakdowns. Some breakouts and breakdowns will completely fake you out. They need to happen with good trading volume to complete the movement higher or lower, depending on which direction that it's going. Understanding the phase of the market you are in will help you to better understand the level of probability of whether the potential breakout or breakdown you are looking at is going to complete its impulse or reject. It's commonly taught in trading courses to buy breakouts and sell breakdowns, but there is more context to making these decisions with successful results. It's not that simple or black and white. And again, if the majority of traders are doing it, then it's an area you can gain an edge against them by just being in position with your trade before these moves happen in the market, and then you end up winning over them when you're selling and they are buying. So instead of buying breakouts and selling breakdowns, you can buy into weakness and sell into strength. When the price is falling and the crypto community is in panic mode, this is a good time to buy the dip or buy a low position of whatever asset you're looking at. I usually watch social media like Twitter for this kind of behavior. When the price of an asset is moving sideways on support while in the early phases of a bullish trend and people are sleeping on the coin, this is the best time to buy. When the price takes off and tests former highs or creates new all-time highs or at least breaks through the resistance level, this is the best time to sell. And of course, for an educated trader, there's more to it when it comes to reaching these decisions through proper market analysis. And of course, I'm sure all of you know Warren Buffett, one of the most famous and wealthy investors in the world, and this quote here. Warren Buffett says, "We simply attempt to be fearful when others are greedy and to be greedy only when others are fearful, when we are looking at maximizing our investments and trades in the market. So a big tip here, don't always run with the crowd. There's value in being counterintuitive and doing the opposite of the majority. And just to sum up this section, when markets are crashing to new all-time lows, you are buying. When markets are going parabolic, you are implementing on your exit strategy to maximize on your profit. And being a successful trader can be just as simple as that. So the next thing that so many newbie traders do is they hold on to losing trades and positions. With the cryptocurrency spot market, you can just hold your positions for the long term, no matter what happens to the price in the short term. But that is called investing, not trading, and you want to learn how to trade and actively profit. That's why you're looking at this training. If you end up holding on to a position that goes into the red, you need to be patient. Many people give up and sell before it comes back into profit. When you hold on to positions that go into the red, it locks up your trading capital, so you don't want to let this happen often or at all if possible. But of course, as a trader, you're going to experience wins and losses, and that is for sure. There's no way to escape that. So be careful which coins you trade, period. Stick to quality, because some coins just die and never come back into profit. Development stops, they exit, scam, or it just gets delisted due to a lack of interest in trading volume. Something for you to remember is that the pain of losing is always greater than the pleasure of winning. So with that, you have two paths here. You can cut your losses quickly and methodically, or be mentally and financially prepared to hold for an indefinitely long period of time until your position comes back into profit. Hence why you need to be really careful which coins and assets that you decide to trade, and only stick to the coins with the strongest fundamentals in the market. That way you can hold in confidence when you do get into these situations. Then the next mistake that people make is they sell too early when the price is pumping. When people do this, they are clearly lacking confidence in their trade entry and strategy, and perhaps even the asset they are trading. Perhaps they bought on hype and have done no research of their own, so they miss out on a good opportunity as the price continues to rise. Then you have FOMO, fear of missing out. They fear missing out on the profits but end up actually losing a lot of profit by selling too soon due to fear of missing out. Educated traders will have a better idea of what is possible for profit on each particular trade and have an increased rate of success by using a proven exit strategy that works for them every time. Once you have a game plan, you have to stick to it. It's the only way you can maintain consistency in your trading strategy, your winning probabilities, and maximize your overall results. The next mistake that people make is holding on to winning trades too long until they turn into losers. It is most often a result of greed and the lack of a specific trading game plan. Uneducated traders and moon boys will tend to think that the price will just keep going up forever, but that's false. Markets never move in a straight line. They always have to correct. Again, these traders lack a proper exit strategy, and when the price turns down on them, they refuse to exit the market until the price bounces back, because for whatever reason, they absolutely know that it's going to bounce back. They trust themselves too much because they could never be wrong, for example. But then it never does within the time frame that they were hoping, and they will end up selling at a loss when they could have ended up exiting the trade break even or at a small loss because they set up a proper stop loss. But of course, so many traders don't do this. The majority of these noob traders will have bought as the price was pumping near the top into overhyped coins like Ripple XRP, for example, or even into legitimate currencies like Bitcoin at any time they are peaking and FOMO is taken over in the market. And many of these same traders will wait until the market is back to lows before they give up and sell their holdings and capitulate to the market. The key to winning consistently in the crypto trading game is to take the money that is in front of you as profitable trading opportunities arise. You never know exactly where markets will find their tops and bottoms. An educated trader can use technical analysis strategies to speculate upon the potential price levels of tops and bottoms, maybe not exactly, but definitely within reason. And according to that data, they buy or sell profitably in levels as the price moves towards the speculated tops or bottoms according to their analysis. The next classic mistake that new traders make is they start trading with big position sizes and they take on too much risk. This can end up being an up and down strategy for inexperienced traders, especially as emotion more easily comes into play in ways that you don't want when you're risking a lot of money. It's best to be avoided and work your way up with smaller position sizes and compound your winnings as you gain experience and confidence. Yes, large gains are possible with this strategy, but so are large losses. They're just as easy to stumble into. The larger the position size, the more likely you are to get emotional about it, which impairs your logic and ability to stick to your trading game plan. If you never risk more than you are willing to lose, you will be doing yourself a huge favor long term. Consistently compounding smaller wins into a larger sum over time is a better long-term strategy. Because remember, bubble markets eventually come to an end by stabilizing. These 10 to 100x gains in the cryptocurrency market with altcoins will not always be a thing in the future. The less fear you have to deal with, the easier it is to think logically in regard to your trading strategy. And then you have the traders who think they need to trade every day or as frequently as possible, often forcing trades where there are no opportunities. They're trading for the sake of trading. More trades does not necessarily make more profit. It can increase your fees paid to the exchange per trade, especially if you are using a scalping strategy where your profits are already small to begin with. Instead, you should take your time to look for trading opportunities that have a higher probability of success and profitability. And do not overtrade. This is one area where less is more rings true. This keeps you out of stupid trades, like after you profited in a good trade and then you decide to jump back in too soon. Do not do that. Don't overtrade. And then lastly, to break even or not win is better than losing. By entering less trades and sticking to higher quality setups, you set yourself up to make less mistakes. And even though you are not winning more often, you are also not losing. So you're preserving your trading capital for more valuable trades that will be coming up next. Then of course we have the mindset of impatience. New and experienced crypto traders are impatient and can't wait for their coin to moon. People who are destined to lose rush into trade entries without a game plan. Don't be in a rush, be calculated, have a proper entry and exit strategy. A famous quote by Warren Buffett says that the stock market is a device for transferring money from the impatient to the patient. And the next mindset that leads to disaster is thinking that you are always right. A lot of new traders will just have too much confidence in their own skills and abilities, and they'll end up in a number of situations, like believing that it's going to just moon no matter what anytime soon. Factors in the market change, but their mindset does not. They also do not have a game plan for when things do change. Instead, they just block it all out, until sooner or later they're very deep in the red. They attribute it to FUD or reasons that may or may not have played a role in the meantime in order to make up an excuse in their mind to help them justify why the current situation has them losing. You need to be prepared to adjust as new information and or price movements come into play. You don't want to be a coin fanboy. They think that a particular coin is the best thing ever and don't take into account negative information and or the technical aspects of the market as they occur. They don't look at the full picture. A successful trader looks at the full picture of any given trading situation. Next, we're going to go over the 4 main fears of a crypto trader. The first fear is that of being wrong. This can cause you to miss out on trades or lose money because you didn't sell when you should have. Fear number 2 is that of losing money. But what you have to understand is that every trader loses trades. It's a part of the game. There are wins and there are losses. Next, we have FOMO, the fear of missing out. This is when a lot of newbie traders will end up just buying into pumps or breakouts. And then next thing you know, the market corrects and they're in the red. Then you have the second form of FOMO, where they fear of missing out on higher profits. So the result of this is that the trader will not sell when the price is going up or peaking even. And this is attributable 100% to greed, thinking that it's only going to keep going up. You can master these common fears by changing how you think about them. The following principles are taken from the book Trading in the Zone by Mark Douglas, which I recommend as one of the must-have books in your trading education library. His principles state that anything can happen. And yes, anything can happen on any average day in the market. He says, you don't need to know what is going to happen next to make money. He says, there is a random distribution between wins and losses for any given set of variables that define an edge. An edge is nothing more than an indication of a higher probability of one thing happening over another, and every moment in the market is unique. So the first principle, anything can happen. Real or fake, also known as FUD, news could come out and affect the price. A whale could pump and or dump the market at any given time. An exchange hack or denial of service on any major exchange could affect cryptocurrency prices. A 51% attack by malicious actors on a coin's blockchain could certainly affect the price on a given day. And of course, you have the random red days for altcoins or Bitcoin that are bound to happen for cyclical reasons. An effective approach is to trade the situations as they arise, letting the market guide your logical trading decisions, and of course, don't let emotion come into play. The next principle from Mark Douglas's book is that you don't need to know what's going to happen next to make money. When you have a proven strategy that has worked for you time and again, and when you stick to it, you don't need to know what is going to happen next in the market. You just act accordingly to the situation at hand according to your game plan. When you are implementing consistently with a higher probability approach, your probabilities of winning will also increase significantly. It's all about setting yourself up for success, and when you have a successful approach, you can easily master your fears by just sticking to the game plan and leaving the emotion out of it. And next, Mark Douglas says there is a random distribution between wins and losses for any given set of variables that define an edge. So given you have a winning trading strategy, which would be your edge, the more losers you have, the closer you are to experiencing your next winning trade, as long as you stick to your game plan so you can let the probabilities work for you. Don't let the fear of losing stop you from taking that next trade with your strategy, or you could watch yourself miss what could have been your next big winner. It's all about consistent implementation when you have a winning strategy, because it's impossible for any strategy to win every trade over time, but if you are consistent with taking your opportunities as they come, it should work out majorly in your favor over time. It's just as easy to go on a winning streak as it is on a losing streak when you're using a consistent strategy, so you just have to keep trading through your downtimes to reach the gold. When you understand this concept, it helps you to reduce your emotional attachment to any one trade as you are ready to move on to the next trade, despite the results of the last one. Now, according to Mark Douglas, having an edge on a trade is when you have an indication that there is a higher probability of one thing happening over another. So stick to your entry criteria once you have found your edge. When you stray from your game plan, it's really easy for you to lose your edge and to lose more trades. An example of this is when you use certain technical indicators to help you make your trading decisions, and then all of a sudden you use a different indicator you were not using before to analyze and make a trading decision. Using too many indicators in your analysis can result in mixed signals anyways, so it's best to stick to one strategy with 2 to 4 quality indicators that work for your trading style. And don't let other factors like social media distract you from your game plan and eliminate your edge. And according to Mark Douglas, every moment in the market is unique, and I've definitely seen this for myself through my own experience. Because you lost last time to a similar trading setup does not necessarily mean you will lose this time, and vice versa in regard to winning. Different traders will be trading against you in every trading situation, so this reduces predictability. You do not know what is going to happen in this regard. But don't let fear stop you from taking a valid entry according to your trading game plan standards. If you do not take a trade in a series of trading opportunities, you could be missing out on your next big profitable trade, just based on the probabilities. From these truths we have discussed, Mark Douglas created the 7 principles of consistency in your trading that we're going to go over right now. 1. I objectively identify my edges. This is your trading strategy. So in your crypto education moving forward, you're going to need to find an effective trading strategy using certain indicators, whatever works for you. This is going to be your edge. Principle number 2 is I predefine the risk of every trade. What this means is don't just focus on your entries, know your exits ahead of time, have a game plan, and stick to it. Principle number 3, I completely accept the risk, or I am willing to let go of the trade. So if you're not feeling great about a trade, stay out of it. Wait until the next one comes along. And this goes back to the piece of advice I gave you earlier, don't overtrade. Principle number 4, I act on my edges without reservation or hesitation. So what this means is don't let fear come into play. It's an emotion that will help you to lose more money. Principle number 5, I pay myself as the market makes more money available to me. So this means take profits whenever possible, whenever the market puts money in front of you. So this means to make a habit of taking profits whenever possible, whenever the market presents the opportunity. Principle number 6, I continually monitor my susceptibility for making errors. To do this, you could review your trades in a journal or trade tracking app like coin tracking. Principle number 7, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. So what this means is if you take a trade out of emotion rather than your proven game plan, that is ultimately going to be really bad for you when it comes to the game of probabilities and having them in your favor according to your edge. So it's important to not form bad habits and stick to your game plan religiously so you don't put yourself on unnecessary losing streaks. If you do this, you will surely come out on top in the long run. And all of the information by Mark Douglas that we have just gone over is actually from his incredibly powerful written work on trading education called Trading in the Zone. I would consider this a must-read for all traders, whether crypto or other financial markets. It's not going to matter. Just get it and read it as soon as possible. And if you are more so the audiobook type, you can also find it very affordably on Amazon's Audible program. And you can literally listen to the whole thing in about 8 hours. Whether driving in your car or going about your day, you should be able to absorb this valuable information quickly and easily. And it's well worth your time. You will find traders talking about this book all over the internet, as it's helped so many people to shift their mind from their former approach, turn around, and start winning. And personally, all of the serious top traders that I know, follow, and respect have read this book and highly recommend it. So there's obviously a big reason for that. If you take your success seriously, you need to absorb the information contained in this book. And I know that you'll end up thanking me later. And just covering some of the last details of areas for your approach, here's a little life mindset for crypto traders that I really believe in and practice myself. It's all about education. Be willing to keep your mind open to new information and skills that can be learned on a daily basis. This is a big part of developing your overall edge as a trader. Surround yourself with like-minded individuals who are practicing and honing the same skill sets in trading. This will accelerate your learning process and help make you more successful faster. Join a mastermind group that focuses on trading the crypto market to amplify your edge as the daily market's information flow increases in quality, quantity, and timing thanks to the teamwork of the group. Don't listen to people who talk about crypto and know nothing about it. There are a lot of people that talk without any type of expertise, like they know everything. And they will project a lot of fear and uncertainty unnecessarily, and you can't take them seriously. They need help too, and they just don't know it yet in most cases. So don't let what people spout off affect you negatively. Stay positive and watch your own negative self-talk, as it can lead to self-fulfilling prophecies that you probably don't want. If one of your positions is down, go do your own research to find out what's going on with the project and if you still believe in the fundamentals. It may just require some patience, and you'll be back in profit eventually as we move through the market cycles, as long as your pick was fundamentally strong. And remember, just like Mark Douglas said, anything can happen 24/7 any day. So be tapped into your resources and be ready for it. It could mean the difference between hitting on or missing your next big trade. So in closing, The key to your success with the crypto markets is education, which will provide you with a proven, consistent trading strategy or system that you can leverage for profit. Once you have the education you need to avoid all the newbie mistakes we have discussed in this mindset and market psychology training, you can challenge yourself to master your emotions and stick to your trading system through thick and thin. Mindset and market psychology are not exactly rocket science. If you can learn and understand the market from this perspective, you'll be well on your way to becoming fully educated as a trader and enjoying the success you have always dreamed of. Caleb Wright here from Bitcoin Lifestyles Club, and I hope you found massive value in your free Crypto Traders Mindset and Psychology training. If you are ready to dive headfirst and immerse yourself in the world of cryptocurrency trading, investing, and mining, and set yourself up for the best results possible, it's all about taking your education as a trader seriously. You owe it to yourself to give a good look at my cryptocurrency trading, investing, and mining mastery course and my 24/7 running mastermind chat group on Slack, because it's also equally important that you surround yourself with other people who are having success in the area that you are working at, having your own breakthrough, like the cryptocurrency markets. The next thing you know, you could be writing your very own crypto market success story with us at Bitcoin Lifestyles Club. You can get more info about the education and mastermind at my website, www.bitcoinlifestyles.club. And you can also click the link right below this video for more information and to get started. And of course, since you have access to this training, that means you also should have the ability to either send me an email or ping me with a message on Facebook. Feel free to contact me if you have any questions. I am here to help. Caleb Wright, signing off, and I will surely catch you soon. Be prosperous until then.